Alright traders, Peter here with Forte Trader, trading futures here. This presentation is made as an introduction and an intro to some of our YouTube viewers on what trading futures is. There's a lot of content out there on the internet. Some of this stuff may be redundant to what you've already seen or know, but for our introduction, for our community of beginners, here are some trading futures basic concepts and what they're about. Just want to disclaim real quick here, by law, we have to show our disclaimer that we are not registered securities brokers. However, we are retail investors, and that's what you are here for, and that's what you're training to learn to be. It's how to be independent, how to be an independent retail trader yourself. Everything is, at the end of the day, a matter of opinion and a matter of rules that we use to trade. However, we use the best rules that we've found that work for us over the years, and thus here we do have to just show that, of course, living in a country where everything you do is you can get in trouble for. So there you go, let's have that there, and let's go ahead and begin. So I want to talk to you guys about some of the lifestyle advantages of trading futures, trading stocks period, and options, or whatever works for you guys. Ours, it's all about trading futures. That's our bias. For those of you that know me, I started trading penny stocks 2 years ago, and then I moved over to swing trading, where I studied by a good mentor of mine how to really read price action trading and candlesticks, and learned that professional traders do kind of all hang around in the same world of price action. End of the day, it's not all about indicators and crazy charts. It's about price action. And what I realized after going into that is that I did not have enough capital myself to trade big, mid, and large cap stocks. And then I got into the world of options. For those of you that know me, I found a lot of manipulation in the market. Have since even pulled our curriculum out of Forte Trader and our totally futures bias. We make money daily on futures, whether it's through crude oil, the E-mini S&Ps, and also the Dow YM. Okay, so we're very flexible, and we do that for a reason. We do that for also because of the purchase power of our students as well. Some people can buy more into crude that has higher risk per tick move, versus some of us that are a little bit more where we look for an index that is basically a little bit more, I want to say, forgiving. So some of the lifestyle advantages, you could be your own boss. Obviously, I got out of the car business after 6 years, and got into like even driving for Uber, just to get the freedom that I needed to run my trading business, selling cars, making, some years 120, 130 grand a year, or some years 60. Just did not work for me with my schedule. I did not have a flexibility, and I needed the flexibility to be a trader. My wife and I love world travel, for those of you that know me personally, and that was our goal, was to find a business that can work for us around the clock when we want to, that requires very minimum overhead and minimum responsibility as far as being tied to a specific location, business, or to employees. And so I found on the checklist trading was the way for me to be my own boss and be independent. And thus, with that out, you're able to basically set your own schedule. We work around the trading hours, the general trading hours of the CME, the Chicago Mercantile Exchange. However, you can trade futures almost 24/7. However, we do trade around those times. But with that said too, nobody's calling you and bothering you during this time. You are your own boss. You have control of your own schedule. You can trade 2 hours a day, or you can trade all day. Our team, ourselves, we trade in the morning hours preferably, and then it kind of tapers off into lunch hours, where we try to stay away. And plus, we're doing this for freedom, not to get filthy rich. We're doing this for the time freedom, and that's where like money means the most. Where you can buy into a certain lifestyle that you're just happy with, right? A certain happy level. So we're not doing this to sit there and spend 8 hours a day of your life at a screen. It'll take the fun away from trading, and there's certain other reasons why we don't do that. We'll talk about later. Okay, and thus, again, with that said, we build up that financial and time freedom. That's the best thing of trading, is no one's bothering you. You are responsible for your own time, and you are responsible for your own success, and thus making your freedom financially. We like to teach others to do the same thing. We want others to teach other people to do the same thing, and which leads to one of our last things too, is like with helping people. We do this because we like to help people. I do it myself because I like to help people. Of course, I like to be profitable. I like to make money. I don't like working for corporate America. I've made my point over social media in the last couple of years very clear on this, and I've had enemies over it. I don't really care. We do this to support each other that have the same intentions, the same beliefs, the same plan on being free, being financially free, time free, teaching others to do the same the easiest way as possible, and pretty much just help people. By doing that, you'll feel much more fulfilled than any 9-to-5 job. Okay, there is some lifestyle disadvantages to trading. Bottom line is, at the end of the day, I can guarantee you there is no security whatsoever. You're responsible to treat this like a business. You're responsible to learn like a student and treat it like a business. You have to be accountable. Okay, this is a very high accountability business with a lot of emotional stress. Okay, this isn't like I have a golden ticket to teach you. I've gone through so many mentors through the years and learned, even after paying a lot of people to learn their methods and rules, half of them stank. Half of them did not even really work. And I had to learn the hard way financially and emotionally that it's a very lonely business, and you have to be accountable. Okay, but if you do, you'll come out in the positive. You're gonna have losing days. You're gonna have losing trades. Okay, that's gonna happen. That's part of the business. There's not a single trader in this world of big hedge fund managers that don't lose a lot of money. They make a lot of money because they also lose a lot of money. They don't talk about it, and they're probably less emotionally attached to their money because it's not theirs. We're trading our hard-earned money in the beginning. Some of us have borrowed money or sold things that we appreciate to get in this business because we believe in it. However, we are emotionally attached, and that's where it also comes a big downfall in the business as well. So we have to understand that part of the business is that we are going to lose some trades. We're not going to win all the time, and that's okay. We have learning curves and rules how to get you around losing less, and that's what learning and education of trading is all about. But be prepared, because it is a lonely career. I can't stress and mention to you how lonely this business is. There's been times I feel like I got some support and then the support disappears, or the support I have to pay for because there's nobody in my community that believes in what I do, and they think it's like throwing money out at Vegas throughout the highway, and it's very lonely. Some people almost will lie. Family and friends will lie to make you feel like you're doing the right thing because they don't want to discourage you, but they don't have to necessarily believe in it. It's just that it's a very lonely career, and that's what the communities are all about. Sadly, some of the communities are all about money, and they just want to get paid, and that's what it's all about, and it sucks. And I gotta say, some people just outgrow themselves. Their businesses grow big, and they're not available like they used to be. Their intentions change, but some of them also grow teams big enough to help support the newcomers. So overall, it's a lonely career. It's what you make of it. Get close to people and email a lot of people and get a lot of information and build circles, and this is what we're all about too, is the community part. Okay, so hey, enough with the bad news. Some of the advantages, we are dealing with, like, let's say right now we're talking E-minis on this slide. Since this slide, I also have options for some of you more aggressive crude oil traders. Actually, crude oil, by the way, just so you know, side note, it also, just like the YM, the Dow Mini futures, is a little bit more forgiving. However, it is aggressive on per tick value, almost like 1 penny is equivalent to a $10 move. But during the time of this slide, we had E-mini futures. We're talking about as our emphasis. I'm going to teach you guys and show you in the curriculum a little bit more of trading different kind of futures. Okay, but it is one of the highest traded markets in the world. I mean, Forex is just above the futures, the future stock indexes. So Forex is highly traded. It's really high. This is the second highest, I'd say, but the highest probably most popular market in the world to trade. Super liquid, a lot of volatility, and so you can get in and out of your trades really well. There's a high leverage in E-minis, meaning that you can make up to $50 for every $1 move per contract. Okay, so now high leverage could also be a little bit of a disadvantage to you. It can hurt you as well, because if you make the wrong decisions and uneducated guesses, you can lose very fast. So the forex markets and the futures markets are highly leveraged, but if you use it conservatively and with rules of trading that we teach you, then this will not work against you and will work for you. So the high leverage is actually a really good thing. You can buy into the markets at a really low out-of-pocket cost. Okay, you're taxed less on futures versus stocks. 35% of what you earn is capital gains tax. I'm sorry, let me rephrase this. There's a 60-40 rule, okay, with the futures market. So you're taxed less versus your options and stock gains. So 40% of what you earn is taxed as a short-term capital gains, okay, and 60% of it, I'm sorry, long-term capital gains, 60% is 15%. So you end up paying less tax. Hey, don't ask me. I'm not a super CPA guy that can really talk about these things. You can talk to your tax advisor on that, but it is much more tax advantage. Okay, open 24 hours a day. Okay, the market is open 24/7, Sunday through Friday. It closes about 45 minutes a day for maintenance, and then on Friday, from Friday night through Saturday, it's closed. So Sunday opens at 4:15. If you wanted to trade after hours, you got to have a more margin to trade. However, it's doable. You can do this from anywhere around the world. Okay, it's up to your own preference and how much capital you have to play with. A lot of hedge funds do this because they have mad money to do it. A lot of traders that I know do this start with a few grand, just like I did. Okay, another great advantage of trading the futures market is that there's no pattern day trading rule. Some of you that have already tried stocks, you already know that to trade even like a penny stock, if you don't have at least $25,000 in your account, you could only trade 3 trades per week, and that's it. Otherwise, you're considered a pattern day trader, and you have to have at least $25,000 in your trading account. Now, what that means is if your account drops down to like $24,800, and you already did 3 trades that week, and you saw a good opportunity, you're not going to be able to buy. You need to have over $25,000 to do that. With futures, you don't have to have any of that. Another thing is, in the stock market, and this is slowly becoming something in the futures market as well. I won't lie to you about this. There's less manipulations in the futures market from high frequency traders and brokers that try, and hedge funds that try to manipulate the markets by buying big. Most of the time are going to have difficulty because of the liquidity. There's a lot of liquid volume in the market, so very hard for them to do something like that. Some disadvantages, again, higher leverage, like I said earlier, it can hurt you, means higher risk of loss. We're going to teach you how to avoid having that by risk management techniques. And again, nothing is easy, or else everyone would be doing it, right? Put a little screenshot here of something a buddy of mine made. You gotta get cut like a diamond if you want to be like a diamond, he says. This is from our marketing manager. Very nice. So how does it work? Real quickly here, guys, we're coming up at the end of this video. The symbol here that we work with at the time of this chart that we made here for you, this presentation, in this case is the ES, which is basically the ticker symbol for the S&P 500 mini. Okay, not the big S&P. This is an electronic market that's run and administered by Chicago Mercantile Exchange. Each tick value is 25 cents, meaning every dollar move, a quarter of a dollar, right? Each cost per tick is $12.50 in the ES, okay? And the margin during the daytime, when we trade during the US open market hours, it's $500 margin required. We were talking about leverage earlier. This is where leverage plays in, and you can get each contract at overall $500 in of your account. So we can get in really low, play the markets with a little money, take advantage of leverage, and carefully scale up our accounts. So there's the benefits, the liquidity. We can predict price action plays by price action studies, which is what we're going to do. We don't need a bunch of indicators. We use a couple small ones just to kind of verify what our move is on our momentum and our directional plays. Other than that, we're all price action trading. We are doing the professional, best ancient way of trading. No special recipes sold here or anything like that. Just a good old sound knowledge of candlesticks. Okay? So, the drawbacks of the market could be that it can range all day. These things don't break out and trend a lot. When they trend, they're easy to make money. When they range, in my opinion, I think since this slide, I think it could be really easy to make money too. It's just by using some price action trading, just knowing our direction, and maybe doing some fade plays. We will teach you all of that here at our school. So that's the end of this slideshow. We look forward to seeing you in our school, in our within our group, and that is it. Thank you.